you to this webinar about the business plan stage 3 with a focus on the topics organization and finance. If you want to learn more about how you can participate in the business plan competition Berlin-Brandenburg in general, please watch the previous webinars, which you can find on our homepage. Here you also can find our handbook of the BPW competition, right? The first webinar was called Two Path, One Goal and covered a general comparison of the business plan and the business model canvas. The second webinar went more into the detail of the business plan stage 1 and the topics product and services. And the third webinar explained the topics market analysis and marketing, which are part of the business plan stage 2. So before watching this webinar, we encourage you to watch the first 3 webinars. Also, please use our calendar, in which you can find more helpful events, seminars, and workshops. And if you have any question, please don't hesitate to contact our team. So, as you know from the other webinars, the competition has 3 stages or cycles. In every one of the 3 stages of the competition, we honor the best business plans and canvases with a total of over 50,000 euros in prize money. In stage 3, you can win 8,000 euros for the first, 6,000 for the second, and 4,000 for the third place in the BPW. And we also have a special award for sustainability during the third stage of the competition with a prize money of 5,000 euros. Okay, so you can participate at any time during any stage or cycle, and it's up to you if you would like to create a canvas or a business plan. Maybe you have participated in the first stages already, and maybe you have won prize money. So if so, congrats to you. Now go on. You're on a good track. So if not, doesn't matter, because you have better luck next time, right? So let's focus on the third stage now. If you decided to submit a business plan in stage 3, you have to submit a complete business plan, right? That's all 17 to 38 pages. And don't forget, it's not about writing as much as you can. It's all about delivering a concise and proper plan. You can definitely manage that within the required numbers of pages. If not, please rethink and rewrite the chapters. Your judges will highly appreciate that. So, okay, please make sure to check our website for the official submission date. And as you also know, sustainability is a very important topic nowadays, and also in our competition. When you integrate this topic in your business plan, please don't forget to put the cost related to it in the financial part of your business plan. In the previous webinars, we have described how you can connect the dots and produce a solid business concept. For example, when you mention an intern you are planning to hire in the financials, you can also find the salary of that intern, right? So don't forget to include all the numbers for relevant aspects such as supplies, manpower, or sustainability. Forgetting this is one of the most common mistakes in business plans, by the way. So if you keep this in mind, it can also help you to win the special sustainability prize offered in the third stage of the competition. So in this stage of submission, stage 3, you have to include a proper 3-year financial plan in terms of strategy and numbers. Remember that your business plan should be structured clearly and present the key information about your business in detail. Okay, so before we start with the content, let me explain you what the third competition phase looks like. The celebration ceremony of the first 2 stages have already taken place, and the seminar and workshop program in Berlin-Brandenburg is running. The great thing about the seminars and workshops is that they are for free of charge, and you can connect to experts and fellow founders. You have the possibility to upload your submission of stage 3 online before midnight on the submission date. To jurors then evaluate your submission by giving grades and helpful tips. So, and yeah, more or less everything the same, just did in the first 2 rounds. So, and then we can move on. Let's start with the chapters of the 3rd stage now. You have to deliver summary, product, service, founders, market research, marketing, business organization, financial plan, and financing requirements. And don't forget, you now have to deliver the entire business plan, including your approach on how you're planning to develop a sustainable company. And please rewrite all your chapters, also the summary, based on the feedback received from the jurors, and put all the costs in the financial plan. Alrighty. So then here we are. As you know, in the summary, we have to provide all key aspects of the whole plan. So you have to add important information about the topics which we discussed today. These include questions like who are the managers and the legal form and structure of your company, and the numbers, of course. So how much money do you need and during what stages? What will it be used for, right? So, and let's continue with the chapter business organization. Overall, you should not write more than 3 to 6 pages here. And you can use diagrams and organizational charts as well. So please make sure that you cover the following topics. Business system, or core business, organization, milestone plan, legal form, executive management, ownership structure, and location. Every startup is born from an idea, a solution for a problem, or even a specific product, right? So when you decide to start a business, you soon need to tackle the question of who's going to do what. So this will be this will be the first time you have to think about your business and organization. You will have to think about each aspect of your business and consider who assumes responsibility. So the aim of developing an organization is to show how value is created in your company. Try to describe this value creation process in the best possible light. So, and explain how your team members can share their experiences, apply their skills, and possibility also acquire new ones, right? What is important here is to highlight your USP. How are you ahead of the competition and how do you make money? So let's start with the topic business system and core business now. What does the business system for your product or service look like? So to describe your business system or core business, you can start with a value chain from Professor Porter from the Harvard Business School. With this value chain, you can show how your industry works. So for example, when we look at the process how to make tables, the value chain can look like this. First, we need raw material such as wood, right? So, and here we have 3 different providers where you can get the wood from. Now, there are different ways of positioning yourself in the market. One way is to say that you are one of the 2 manufacturing companies, for instance. So you want to compete against one other player, right? So then there are 2 wholesalers. You sell to and a lot of different retailers who sell the tables to end customers. So and then you can describe exactly what you do. Okay, let's take a look at another way of positioning yourself in the same market. Maybe you integrate 2 steps in one, like this example. As you can see here on this slide, you could be both the manufacturer and the wholesaler, and you only have to sell to the retailer. It's a different business model, right? So, or you maybe do think differently so that you can deliver cheaper or faster or on higher quality. So the value chain is a good starting point for you to understand your industry and to show the reader that you know how it works, right? So it's not necessary to provide illustrations or diagrams here. It's also fine to describe your industry in a few sentences. Please use the results from your market research here and link it to this chapter, okay? That definitely makes sense. So then explain your company in more detail. So you can see here the questions. To do that, you can use a customer experience journey template, for instance, which you can see on this slide. So think of the process of delivering your product from a customer perspective. Describe step by step how everything must work for your customer to receive your product or service and what you have to do to make this happen, right? So in doing so, make sure to answer the following questions. So what does the business system for your product or service look like, for instance? Which activities are you focusing on? Which activities would you like to perform yourself? And do you delegate activities to third parties, for instance? And how is your organization structured? And this is our next point. In the next step, you have to explain how you want to organize the steps in the workflow in your company. So, and how is that structured? Which staff member is in charge of which key role in your business? What are the needed competencies, for instance, and how you can structure the different sets of tasks. So, and for that, we can use this one. Who's responsible for what and why, and what do you want to do inside your company? Which steps don't make sense? In that case, you can outsource them instead of doing them yourself, right? So for instance, your taxation. You can delegate the task and let your tax advisor do that because you don't want to deal with taxes when you actually love building tables, right? So that makes sense. And make sure that you have a good intern because someone has to get the job done, right? So no, I'm just kidding. But distribute the work task well, okay? So an important aspect of organization is the question, what kind of company culture do I want to establish? Many modern businesses shape their company culture primarily by thinking about their vision and company values. So these can provide clarity and offer guidance for all employees. So add specific business objectives and you're good to go. When you let each team member receive and assume responsibility, everyone is in a position to make the right decision within their division, right? So this type of management often provides interdisciplinary teams as well as specialist teams, okay? These teams can then tackle a single task or project as whole. So let's talk about ownership structures now. Describe who receives ownership over which part of the company. So does the person who provides the idea receive more shares? So this is one of the most frequently asked questions in Teams, by the way. So how many shares can or have to be given to investors, for instance? So should employee maybe hold shares via an associated company? This could be also an interesting option. My advice in this case is try to tie the key competencies that are important for your business to your company and allow employees to hold shares. So my opinion. If you do this, you will experience an entirely different and stronger level of commitment. Because it represents an appreciation of their performance and shows that you intend to build something together in the long run, right? It just doesn't make sense to keep 100% of your company and make no progress at all, right? So let's move on to the legal forms, and they are colorful in this case. So what is the legal form of your future business, and who are the shareholders, and who assumes executive management responsibilities? The German legal forms for companies can be divided into 3 or 4 main groups and a couple of highly specialized forms. So the dark green boxes in the middle represent a legal form called Kapitalgesellschaften or corporations. And this is one of the main groups. The secondary group are the ones in orange, pink, and light blue on the left-hand side. These are all called Personengesellschaften or partnerships. The light green blocks at the bottom represent mixed structures or corporations and partnerships. These are structures with which you can optimize the private financial responsibility and taxation usually. So they are more complex, and I would not recommend choosing any of these forms at the beginning, but it all depends on your particular project and industry. All boxes with a black frame around them are the most common legal structures for founders, depending on the business model, of course, and the goal of the company. One thing is really important. Please keep in mind that you can change the legal form whenever you want. So they are a little bit like Lego blocks, okay? Every legal form has advantages and disadvantages. So my advice, start nice and easy with a simple legal form. And when things go in the right direction, then you can switch to another one, okay? So also be aware that everyone you talk to is going to recommend some different legal forms. So because everyone has their own personal opinion about legal forms, okay? At the beginning of your company, you should focus on your core business and avoid overloading yourself with too much bureaucracy, right? So, and because of that, my opinion, nice and easy, and then, move on. In general, we can say the corporations, the dark green ones, and definitely the light green ones, are more complex to handle than partnerships, right? So, okay. Here we are. Let's continue by talking about the choice of location for your business. And when we talk about the potential location, there is only one right region, right? So Berlin-Brandenburg. Okay, these are 2, but they work hand in hand. So tell us which location factors are important to your business. And for many businesses, particularly in retail and chain operations, the choice of location is extremely important. For others, low rental costs are more important. So consider carefully which location factors are relevant for your business. For example, accessibility for customers, surrounding environment, transport connections, technical facilities, costs, etc. And then you choose Berlin-Brandenburg, right? Okay, so, and don't forget to join the IBB, which is the Investitionsbank Berlin, and the ILB, Investitionsbank des Landes Brandenburg. They would love to help you with fantastic opportunities, subsidies, loans, context, and advice. So if you take advantage of our fantastic network events, you will have the chance to run into the advisors of these institutions. Okay, so makes sense. Next step or next chapter or question, milestones, right? Investors and bankers want you to tell them how exactly you plan to develop your business and make it a reality. So, but first of all, this is very important. Keep in mind that you are doing this for yourself, okay? List your mid and long-term objectives clearly and define milestones. Very important, okay? For your business development, absolutely necessary, from my opinion. When setting objectives, make sure that they are both optimistic and realistic. So, and answer the questions for yourself. What do I want to achieve with my company and when? So, or your company. So, do you want to work on your project full-time or half-time or part-time? So, there is no right and wrong. No matter what all the people surrounding you say, there is your way and you have to find it. If you don't want to spend all your time working for your startup, then you may need a bigger team or figure this out and make decisions accordingly. Are your considerations as optimistic as they are realistic? So, and when you begin selling your product or service, how much will you sell and for what price? Another interesting question, right? Price. And which personal cost will arise as a result, and what does your short-term investment plan looks like? Many, many interesting questions. Please put them all together in this milestone plan. And then let's continue with the chapter financial plan and financial capital. Overall, you should not write more than 3 to 6 pages here. And here's a question I would love to answer before we go on with the financial part. How do I know how to distribute the task best in my company? That's a very good question. I would say you start with a simple question. What do you really like to do and what do you don't like? Make a list and then ask your co-founder what is he or she good in and what does she like to do or he, and then yeah, try to and we talked about that already in the second webinar. Build something like job descriptions. Yeah, so think about which type of persons do you need in your company, and then you have to distribute the tasks at best as you can. So, but what really happens most of the time in startups is that, of course, you have to do things you not like that much in the first couple of months. But from my perspective, it definitely would make more sense when you focus on the things you really like to do. Okay, and try to find interns or co-founders, employees, or sort some tasks out. So this is what I can say now. Okay, so hopefully this was a little bit helpful. Maybe later some more questions. Let me start now with the financial part. Before I start, please use our resources online. We provide some Excel tables you can use to calculate your project in more detail. That make definitely sense. In this section, the previous statements you made are shown using financial figures or numbers. So the purpose of this section is to provide an overview of your company's future finances, income, and assets. So this information helps us to understand whether your business plan is viable and can be financed, right? So use this section to outline the most important core assumptions for the financial plan. These core assumptions may include expected profit or loss in the first years. So with an overview of the profit and loss plan, please. So break even, when will your earnings cover or exceed, there's the 0.0, your expense, and amount of capital requirements and plan financing, and also outline of the assumptions you have made when estimating income, expenses, investments, etc. So, from my opinion, when you get started with the numbers, do yourself a favor and do it nice and easy. Buy some Post-its first and paint a big arrow on the wall. Better you paint it on a big sheet of paper and put the paper on the wall, right? So, and it's important to get familiar with this abstract chapter and lose the fear. And to be honest, a lot of business managers don't like Excel sheets and numbers either. So you're in a good, the majority of people don't feel comfortable with this chapter of a business plan, but if you did a good job in the previous chapters, then this is actually the easiest one. I know you don't believe me, but I'll show you. So relax and listen first, then we give those numbers a first try and do everything together step by step. So, okay. So basically, you have to answer only two main questions. How much money do you need and when do you need it? Okay. And it's not about calculating your project or company and make everything as cheap as possible. So please keep that in mind. It's about bringing the right numbers together so that you can decide if you want to give the project a try. So secondly, of course, it's to have the numbers ready for a banker or investor to look at, okay? But because they always need a financial overview. But no pressure, please. And don't forget to join the regional institutions like IBB and ILB I mentioned before. They can help you with a lot of very good financial products during all stages of your business. So that makes definitely sense. So now give everything in your business plan a price tag. Because everything costs money, right? So paper, pens, rent for the office, insurances, the bank account, computers, communication, also your work. Give yourself a salary and don't make it too high in the beginning, but also not too low. You must have enough money to live your life and pay your bills. So please don't list your numbers using cents, okay? Ignore the cents behind the comma. We only want to see euros, and keep in mind the following rule called kaufmännische Vorsicht in German, commercial caution, or commercial caution, I would say, in English. This basically means that businessmen should act and make financial decisions carefully. Estimate costs higher than you expect and pay them on time, and estimate the revenue lower than you expect and only when you know you will earn it for sure. Okay, so one last thing. You might do an outstanding job putting together your numbers, but rest assured, they will never ever turn out in the way you have planned. Okay, very important. Because life is different than assumptions on paper. So it's okay if they don't turn out as planned. So what matters is that for the moment, when you submit your business plan, the numbers have to make sense of all, okay? Perfect. Here we are with our Post-its. Now let's get started. The profit and loss plan is at the heart of the financial plan. This is where you calculate whether when and to what extent your business makes a profit or simply is profitable. When we start with our numbers, we always look at the costs first, such as investments and operating costs, because we can estimate them very well. And if we did a good job in our market analysis, we can even find average numbers for our industry. So makes sense to make a good market research. So when you are at this step, please make sure to use the resources we have already recommended in our previous seminars and webinars. So on this slide, you can see operating costs, the yellow post-its. In my case, these represent rent, gas, water, heating, mobile phones, something like that. Altogether, let's say, sum up to 1,000 euros per month. And we have investments, the red post-its, so such as computers, cars. Investments are mostly things you can touch, okay? So maybe you would like to keep that in mind. Let's combine our costs here. We are going to start our first graph with the first year, and to make it easy to understand, we begin in January of the next year, and later we're going to add years 2 and 3. Okay, all expenses and earnings from a financial year must be recorded in the profit and loss plan. So creating a profit and loss plan is very easy from the math perspective. The planned expenses are subtracted from the expected earnings. That's it. So the challenge is making realistic forecasts, right, on the basis of these earnings and expenses. So take a look at the assumptions and statements you made in your business plan step by step. Then translate each of them into an earning or expense. So what is the expected extent and cost for people working at your company for the next 3 years? So, as I said before, let's start with the first year only. Start by yourself and figure out how much money do you need for your personal life. So, when you have that, we have to add the cost for monthly insurance, of course, and taxes. And to make it easier for you, if your team needs, for instance, 3,000 euros net, with 2 people receiving 1,500 each, let's say. So then you have to multiply this number by 1.6. So that's 4,800. And then you can round it to monthly 5,000 euros, more or less. That should keep you on the safe side. So in other words, the company has to produce 5,000 euros to make sure that you and your co-founder will receive 1,500 euros net in your pocket to survive and pay your bills. Why is that? Because we have to pay taxes and insurance and everything. Okay, so when we put a number in our business plan, like 5,000 euros, that means not you will get or receive 5,000 euros in your pocket. So there are a lot of institutions, they want money from you. So now let's add to our chart. We have now investments, we have operating costs, and our salaries all together, right? So now we have taxes and other costs. They are a bit harder to estimate. You have to pay at least something between 0 and 45% in taxes in Germany. So this really depends on a various of factors. So, and it's almost impossible to give a general advice on this topic. So I recommend calculating everything as well as you can. And when you have your final numbers ready, ask for help from the BPW advisor, your bank, or a tax advisor to estimate the taxes. Okay. In our case, let's say you have to pay 2,000 euros in taxes, etc., every 3 months. This is, to be honest, unrealistic, but I want to show you now the principle here and not a perfect financial case. Okay, so that's it. Now we have all the costs shown on the chart. If you add them all together, so the amount is 124,000 euros for the first year. Okay. But something is missing, right? Yes, the revenue, such as sales revenue, commissions, etc. So in the beginning of our revenue, I will be it will be low, and then it gets higher and higher, right? So here we are, revenue streams like this in the first year doing business. They are very unrealistic too, but it's only an example. It starts with a few months of no income, and in reality, this phase is usually twice as long as you imagine. Okay, so the revenue increases, and then the revenue increases. So anyways, in my example, we have now 20,000 euros in revenue and 124,000 euros in cost, which sum up to a minus of 96,000 euros in the first year, right? So yes, these numbers are high. This is something you have to learn to deal with. When doing business, the numbers are always higher than the ones you are used in your private life. So, okay. Because the costs are generally higher, and please remember, a really big portion of the money is not yours. Okay, it's the company's money. If everything goes well, you have to pay a lot of bills, and yeah. Now it's time for us to continue with the estimations for the next 2 years. Okay. Here we are. You can see 3 years of calculation, and the red curve shows you that you need money over the next 2.5 years, more or less, before you make money, or make more money than you spent, right? So 99.9999% of all startups need money, time, and resources before they actually make money and become profitable. Okay, so don't hesitate to show us how much and how long it will take until you get to this point. Okay, it's quite normal, and that's the way it works. So, and don't forget Murphy's Law, things go wrong, right? They will never ever go the way we plan them. So here is my advice for you. Include a shit happens buffer on top. Okay, so add, I would say, something between 10 and 20% on all the numbers that involve costs. Okay, so, and please keep in mind, all the numbers you include in your Excel sheet should be listed as net values. So you have to put another buffer, a tax buffer, on top of everything, at least 7 to 90% that represents the value add tax or sales tax, but this depends on your legal form. So it's everything more or less together in one. Okay, here's another graph that can help explain the term break even further. So I repeat myself, but it is the point 0 where your costs equal the revenue you are making. And after the break even, you will earn more money than you spend. And that's good, right? So you will have costs, as you can see in this graph or diagram, from the first day on, and they will increase, right? So revenue will hopefully also follow, but a bit later usually. And one day revenue equals cost, and this is the break-even point. Okay. Whew. Now you have learned what a profit and loss plan is. So, and it wasn't so hard at the end. So probably not. So right now we are good for the next level. So do we remember investments and in fixed and current assets? Yeah, let's take a closer look at them now. We are ready for the next level. So let's pick one example. and as investments. And let's say a computer. Imagine that we just bought a very fancy computer for 10,000 euros. And in our previous profit and loss plan, we answered the question one already. So which investments, when and what, right? So now we have to think from a different perspective. So the 10,000 euros are not longer money, right? They have now changed into a thing, a fancy computer. So on day one, our computer is worth exactly the money we paid for it, right? So, but what happens when you switch it on? It's not longer new, right? It's used and lose value. So all used goods are worth less than new goods, right? And over time, the good or investment usually lose its value, measured in money. Okay, so that means when you want to sell your computer, you will get less than 10,000 euros. I hope this is clear. So, and now we have to calculate and figure out how this amount of money changes. We use a write-down plan to describe this over time for each investment. But I have good news for you. For every good in the world, the German taxation office has done the calculations already. Okay, and you, or even better, your taxation advisor, can find the exact numbers you need in the so-called AFA-Tabelle. AFA means Abschreibung für Abnutzung, which means write down for usage. Okay, so, and that means when we take a look at the meta perspective, our company loses value over time. A write-down plan describes exactly that. So, if you understand this concept, you've already managed the worst part here. Okay, so this principle is relevant for taxation. So, and we have learned already that we have revenue. Hopefully, we'll have that soon. Represented by the green post-its on top. So then we have different costs, such as operating costs, the yellow post-its, taxes, the purple post-its, insurance, and so on. And of course, our investment, 10,000 euros. Revenues minus all costs equals a profit or loss. Quite simple. Okay. So now let's imagine you had a good year. We have, for example, revenue 100,000 euros. Our investment 10,000. Our operating cost 20,000. Salaries 30,000. Others 10,000. A profit more or less 30,000. Okay. In Germany, we have different form of taxes. Please keep in mind that you should always have an eye on taxes and that you have to save enough money to pay all your taxes. This is extremely important. Okay. So one really high tax you have to pay is on the profit you make. In our example, you have to pay a share of the 30,000 euros to the taxation or tax authorities. So let's come back to our computer example so I can explain how tax authorities work. So with our computer, we now have a good in our company which is worth 10,000 euros. And the taxation authorities say now say, hey, this good in your company you can use to make more money, right? So, and it's unfair, then we've got less taxes because you bought something new, right? So we don't allow you to do that. So you have to split the cost over the period of time you can use this good. Okay, so in the case of the computer, the taxation or the tax authorities would say you are going to use this it for 2 years. Okay, so split the costs over the next 2 years, and here we are. And once we do that, our profit is even higher. You can see it in the red circle. Okay, 5,000 euros more, and that means a bigger share of taxes goes to the tax authorities in year 1. Because now you have to pay tax on 35,000 euros, right? Okay, but you can and must claim the other 5,000 euros for your computer in year 2. Now what happens at the end of the write-down period? Starting in year 3, you have to keep writing down one symbolic euro in your books for every month, in which you keep using the computer. And from my perspective, now you should buy a new one, because when you buy new stuff, you can lower your tax a bit, right? So, and once the computer leaves your company, for example, by being tossed in the trash, you no longer have to keep the symbolic euro per month in your books. So this was a tough nut to crack, right? So, but let me tell you, you are a pro in numbers right now. Now you know the principles behind investments and write-down plans, okay? And we are good for the next level. So let's go to the most important part of our financials, the liquidity plan. Not understanding the concept of liquidity is actually the most frequent reason for bankruptcy of business owners, and it could bring you in serious trouble, and to court and even to jail in some cases. So please keep in mind, being the CEO of a company automatically leads to responsibility for everything, okay? So you have to make sure that your company is able to pay your bills at any given time. I don't want to scare you, but this is serious stuff here now. Okay. The principle behind liquidity is very simple and not hard to understand. So you remember our proper planning for the first year. From the planning perspective, we did a very good job. So it's simple, but everything is correct, okay? Now let's focus on the month December, because the phenomenon I'm going to talk about is very obvious when we look at the month December. However, it happens during the entire year, so please keep that in mind. Let's zoom in and let's take me, for example, when I give a workshop on the 15th of December. It is correct to put my revenue of 7,000 in the month December, okay? But to be honest, when will I really get the money? Right, in January, maybe in February or March or something like that of the following year. So institutions need time to pay for invoices I send them. So, and because of that, or that leads to the following conclusion: in year 1, my total amount of revenue is not 28, it's only 21, right? Because the 7,000 are not longer there. So because I have to wait for my money to arrive in my bank account. So, and that means my overall loss in sum, this calculation here, is not 96,000 euros, it's 103, because I have to wait for my 7,000. And if I did have any savings in my bank account, I would be maybe bankrupt right now. So the liquidity plan is therefore immensely important. So to avoid the situation I just described, please keep an eye on your liquidity and make sure that you have one person in your team who's in charge of this. You could call them your liquidity manager, okay? Something like that. Okay, let's sum everything up right now. The liquidity plan, which is usually created for 1 year in standard banking practice, is used to calculate specific capital requirements. In practice, all inflows are offset against outflows. So you may use the items from your profit and loss plan as the basis for calculation here. So the major difference between a profit and a loss plan and a liquidity plan are the fact that earnings and inflows and expenses and outflows fall on different dates. Okay. In the profit and loss plan, earnings are recorded as soon as you create an invoice, but in the liquidity plan, they are only created when the invoice is paid. Okay. Hopefully, I think that makes sense. So it's a little bit hard to understand, but I think we did a very good job so far. So what about write-downs? They are expenses, but don't result in outflows. So therefore, they should be included in the liquidity plan. The liquidity plan takes into account outflows for investments and repayments and inflows from loans and investments. So as well as the items from the profit and loss account. Finally, we have to take a look at the financing capital requirements. Okay, you have already calculated your company's capital requirements in the liquidity plan. So now you have to consider the question of which financing opportunities are suitable for your business. Basically, you still have to answer only the main questions. How much do you need and when? Do you remember this slide? Yeah. For every phase of a startup and established company, you have a lot of different options to get money. There are essentially two kinds of financing. One is equity and one is borrowed capital. So you should usually have a minimum of 15% equity. Yeah. So 10, 20, something like that. So in your forecast that your startup will make losses, higher equity is required. So as your equity must at least cover these initial startup losses. But this also really depends on so many things. So equity does not necessarily need to come only from your own assets. So you can also involve third parties in your business. Many professional investment companies provide venture capital for businesses with a great deal of potential for growth. So banks and building societies are your go-to for loan financing. For banks, limiting their own risk by securing the loan is a key criterion. Loan financing is therefore particularly suitable for investments where facilities, vehicles, or buildings can be used as security for that. Okay, that's it for stage 3, and I have here a couple of questions. So, is it really that easy to switch from one legal form to another? This is one question. Yes, it is. Sometimes you need, sometimes it takes a week or 2, and sometimes you need a notar or something like that. But yes, it's quite easy to change your legal structure or form to another. Sometimes it doesn't make sense. So and sometimes you have to pay up to 1,000 euros or something like that. But it's really easy to change. You can, if you want, go now afterwards on www.berlin.de, for instance, and then you can found your company with you need from your ID card a PDF from both sides, and then you can load it up and pay 26 euros, something like that, and you have found your first company. And next week you can decide that you want now a GmbH or a UG, and then you have to make an appointment with the notar, and then you can change it. It's quite simple. Okay, another question. Is it possible for the startup program if I plan to use grant money for prototyping and after that ask for venture capital for international expansion. Yes, good question. Let me go back to this slide. As you can see, we have for every stage different types of money products, something like that. You can definitely combine things. So, and we have advisors, and once again, maybe please contact the IBB or the ILB or the KfW, which is the Kreditanstalt für Wiederaufbau, or your banker. They are all familiar with all kinds of different options. Creating a proper finance plan or financing for your company is also in some way a bit like playing with Lego blocks. Okay, we can combine things. We can have venture capital and a loan or subsidies, and we can put some things together. Sometimes not, but we have more than 2,500 different financial Lego blocks, I would say. So there are a lot of opportunities, and usually we can finance every kind of company or every capital which is you need. So yeah, more questions? So then let me go to the last slide. Once you have done your research and answered all the questions we have mentioned, you can submit your business plan and wait for your feedback from your jurors. Don't forget to send us your CVs and, for example, letter of intent as attachments. And before you submit the final version, please give it someone to read, as you would with a job application. Yeah, so maybe you can get some helpful feedback from your friends to improve some parts. So I hope you enjoyed our overview of the requirements of the third stage of the business plan and the financial part. I wish you good luck, and if you have any questions, please feel free to contact our business plan competition team. And thank you for watching, and take care. And then we have more questions. As we are approaching to the no, thank you. There is a good alternative to VC to not be dependent on decisions. Is there a good? Let me think about that. Usually, now it costs 150 euros per hour, but I'm just kidding. Yeah, there are a couple of alternatives. So one could be that you go for a crowdfunding, for instance, or a crowd financing, or the money from, we call it family, fools, and friends. Your caring grandma, for instance, or something like that. So there are, or business angels, for instance. So we have a lot of opportunities. So I cannot explain them all because, as I mentioned, we have more than 2,500 different components or things you can do. And also we have at the IBB and ILB a product which called Risikokapital. This is the German translation from venture capital. This could also be a component for your financial plan, or the KfW, Kreditanstalt für Wiederaufbau. They also have similar things like VC, but in a slightly different way. But it's too hard to explain this right now here. So there's another question, and what if I need more than 5 million euros? Is there only way to go for VC? No, from my perspective, that more or less everything depends on the phase of your company. If you need and the number, if it's a million, 5 or 10, it doesn't matter. So usually it's harder to get 10 or 20,000 euros than a million. So it sounds a little bit weird, but this is how the system works. We have a lot of opportunities to finance 5 million, but we need at least 10 or 15% private equity. In this case, you need something between 500,000 euros and 750,000 euros. But we also can combine things to leverage the equity. Please, you can take a look at a homepage from the Bundesministerium für Wirtschaft, which called förderdatenbank.de. There is no English translation for that, I'm sorry, but there you can start your research and find products. But also you can go to your bank advisor, taxation advisor. They all know different the different Lego blocks or financial products you can use. So 5 million are no problem. So more or less. Okay. Thanks, Andreas. Thank you for listening, and have a good one, and bye-bye.